I'm going to show you a visual example of a group structure with some advanced features that's going to help with IHT mitigation, tax efficiency, asset protection, and much more. But the starting block for most of you is you probably have a trading company. So your actual business that trades day to day, receives income, has expenses, has profits. For those of you that don't already have this, you want to insert a holding company that owns the shares in your trading company, removing direct ownership from you, which decreases risk, enhances protection, and allows for some nice benefits, which I'll explain towards the end of the video. Now, if you want to take things a step further, and you want to focus on reducing inheritance tax for the long term, you may have some children that you want to pass some of your estate over, but you don't want to pay 40% over to HMRC. And you also want to invest, get a better return on your capital. Maybe that's private equities in companies, properties, different investment schemes. You can insert what's called a family investment company. Now, the family investment company is going to own the holding company. And there's going to be two types of shares in this company. There's going to be what's called A shares, which are the controlling shares. And there's going to be B shares, which your children, siblings, or whoever you want to incentivize longer term is going to own. And that is going to allow them to start to transfer and receive some of them assets before your estate needs to be transferred at the point of death, which is hopefully a long time away. But this allows you to start getting a return on capital and start to transfer some of that wealth to family, which is called succession planning. Now, the flow of capital here, just so you understand it, you have your trading company that earns a profit, pays corporation tax, passes that up to the holding company. And if you want to take that a step further and pass it up to the family investment company, then you can do. And that's when you can start then investing in assets and getting a better return. And better still, there's no corporation tax that you need to then pay again to transfer up to the holding company or the FIC. So now we've got a structure that's got three different moving parts. You're probably going to want to invest in a pension at some point, set yourself up for the future. So let's incorporate a SAS pension scheme or a SIP. And let's start using your 60k per year or whatever you're comfortable to contribute into that pension scheme. You may just want to have that accumulate in the portfolio investment that's inside the scheme, or you may want to invest in property, commercial property that maybe your office block uses to actually trade out. Now, you're going to be able to pay yourself rent from your trading company up to the SAS company and essentially get tax-free returns that accumulate in the SAS scheme and corporation tax relief in the trading company itself. So again, something not many people know or utilize. Now, adding on another moving part to this, and I know this is getting complicated, but please stay with me. Let's say you have an idea for another trading company. You want to set up a software that complements your main trading business, or you want to go into a joint venture with another partner. Well, you can establish another company that the holding company owns. You've now got a fully fledged group structure with a holding company that owns your trading companies, and any surplus profits you can now either decide to pass it up to your SAS pension scheme and get tax relief on the contributions, maybe go and invest in commercial property, or push it right up to the top of the structure, which is the family investment company, which allows you to start on that succession planning longer term to make sure your children are looked after and you can generate that generational wealth. Now, the benefits don't stop here. Let's say you want to sell one of them trading companies and you're just focused on pushing it up to the top of the structure in this family investment company. I'm going to show you how you can avoid capital gains tax by claiming what's called substantial shareholders exemption. Now, providing you pass all the criteria, you're going to be able to have a completely free business sale, providing it remains in the corporate wrapper, which means that if you sell your business for £1 million, you can pass it up to the holding company, then up to the family investment company, and you've paid 0%. I've got one more for you. Let's say that trading company in the first years of being set up generates a loss. Maybe you put in a lot of money into this new software venture. The losses generated from the trading company can be offset against the profits in the main trading company by using what's called group loss relief. Now, although this probably sounds quite complicated, this is exactly the job of a professional tax advisor to look at your situation, your long-term goals and ambitions, and plan the right structure by reverse engineering where you're looking to go and putting in place the right structure and tax strategy. And here's just the start. And I just want to caveat this by saying all of these reliefs and exemptions and different structures, they have so many points that you need to consider. So please don't take this reel as advice to go and set up this exact structure. It's always got to be bespoke planning to make sure you tick all the right boxes.